Good evening. It is time for today's Tax Talk. I'm your host. I'm attorney Stephen Leahy. It is Tuesday, November 15th, the year of our Lord 2022. Here's a story I haven't really wanted to talk about, this FTX. Because is it a crypto story or is it just a scandal story? I think it's a crypto story. That's what we're going to talk today on Crypto Tuesday. Won't you join us? As I mentioned, I've been avoiding this story, not because I've been avoiding talking about it, but I've been reading a lot about it, this story, because I was really familiar with FTX. They haven't been around that long, but then I saw that they had their naming rights on several stadiums. That the guy was a 36-year-old kid. I mean, I use that term, as an old man, I could do that. But he was a young man, and he's at less than 30. He's worth billions of dollars. That doesn't happen very often. He had this. He looks like Hans Niemann. Do you know who Hans Niemann is? With the hair, and he said he drove a Toyota Celica and wore T-shirts and all of this. Kind of had this image of himself. I did see one high rolling guy who said, when someone's making $1 billion and they're driving a Toyota Corolla, watch out, because they're trouble. That they're more involved with power than ever. And anyway, he didn't really live a low class life. I've seen some of the since FTX filed bankruptcy last Friday. Since then, I've seen some pictures of the Bahamas condo that he had, $40 million. It was not low life. He did not lead a low life. So he might have driven a Toyota Corolla when he drove. But I'd say he didn't drive very much. I'd say he had people driving him around. And he had a lot of powerful friends in the government. Amazing who he hired to be his regulatory leader right out of the United States government. But here's the thing. This company wasn't an American company. It was an offshore company. So when they tell you that this is evidence that we need more regulation, he wasn't subject to American regulation. And maybe that's one reason why we don't need too much regulation, because you'll send all of these companies offshore where we don't have the influence against them. Now, he used all that his offshore money for influence here in America with politicians, and it seemed to work. It bought him time and room to manipulate and take advantage of a lot of people. A lot of people lost a lot of money. So anyway, let's read a couple of these stories that I have there. But first, as we do on every Crypto Tuesday, we will look at the markets at our favorite site, coinflip.tech. So here it is. Today's Bitcoin, it's up slightly. Again, Ethereum is about the same. As I often notice, they move pretty much in lockstep. So here's the last week. Remember, it hit over 20,000, and people started thinking that maybe that was 2 weeks ago. People started thinking, oh, hey, Bitcoin's back. We're going to go up to 60. And then it quickly fell. Let's go to 30 days. Let's see, can I get the 30 day? No, it's not giving me the 30 day. But anyway, we should see it. Let's look at these details here. Here's the Ethereum, very similar. Again, let's see if we can quickly go and get. Can I get a? There's the 30 day. That's not the 30 day. That's a 7 day. Okay, it's not giving me 30 day. But as you see, that it's had a wild ride. And it's below the 20,000. Now it's at the $16,000, $17,000. Does this FTX tell us that cryptos had it? Probably not. I think the FTX, this scandal is no different than any other bank scandals. The savings and loan scandals in the 80s, the Bernie Madoff scandals. Uh, it, this rings of all of that. So let's see what they have to say. NPR, which is that's great business uh, analysis. FTX made cryptocurrency that brought in millions. Then it brought it down. Then it brought down the company because they created their own crypto FTT and then used that FTT crypto to leverage real money because that crypto was made out of thin air. Not long ago after they started the now bankrupt FTX, in exchange for trading cryptocurrencies, Sam Bankman-Fried and his co-founders decided to make their own virtual currency a la Bitcoin. There's no reason if you're in crypto not to create tokens, says Hillary Allen, a professor at American University, Washington College of Law. You can create tokens out of thin air. The FTX token, or FTT, as it was more widely known, debuted in 2019. So what is that? A little more than 3 years ago. And a couple of years later, the digital currency was valued as high as $80. Today, there are almost 250 FTX tokens in circulation. 250 million, I should say. Not bad for something that is just data. Although it was a major moneymaker for TFX and helped keep Bankman-Fried's hedge fund afloat, in the end, the FTX token proved to be the company's undoing. After an article in CoinDesk earlier this month raised questions about FTX's financials, the CEO of Binance decided to offload his company's sizable FTT holding. That spooked investors, and as word spread, the token's value cratered. Again, and it's these runs that create the kind of expose what's going on in the company and the Ponzi scheme. The FTX token was part of an elaborate rewards-based marketing scheme to attract buyers. I think of it like airplane miles, said this person who teaches economics at Carnegie Mellon University, like loyalty points for using the exchange. Customers who bought FTT were able to execute trades on the company's exchange at a discount. They could also use the tokens as collateral. The company regarded token holders as VIPs. On its website, Bankman-Fried's company referred to FTT as a backbone of FTX ecosystem, but the customers didn't know those tens of millions of tokens weren't readily widely distributed, which is a key to having a market determine the price or value of any currency. In fact, a lot of FTX, sometimes this happens. Well, FTX fell apart quickly, and there is still a lot to learn about the stunning collapse. But it's clear that Alameda Research used FTT to make speculative bets on cryptocurrencies and complex financial products. I understand that he made a $7 million bet against Donald Trump. In other words, those VIPs handed over real money to buy purely digital token from FTX. And all that was the basis for making risky and speculative investments. Again, when you have no downside, you always want the up, and they take very risky bets. The token acted as a conduit through which money was being funneled from FTX cryptocurrency exchange to Alameda Research. The future of money, the author of Future of Money, How the Digital Revolution is Transforming Currencies and Finance. This inappropriate and unseemly practice evaded scrutiny in the largely unregulated world of crypto, which Securities Exchange Commissioner Chair Gary Gensler, the top cop of Wall Street, has compared to the Wild West. He didn't compare this company to the Wild West. And again, this company was a Bahamas company. It wasn't subject to the SEC. It was a very murky set of financial practices with no transparency, no investor protection, and no financial guardrails of any sort, said this professor. About a week ago, Binance's Zhao announced on Twitter that his company was selling hundreds of millions of dollars worth of FTT. An old-fashioned bank run followed, and soon the tokens were practically useless. According to this professor, that was to be expected. The moment there is the slightest whiff of concern about a token, the value of that token can vanish to practically nothing, a flash. he said, which is what happened here. Today, FTT is still trading in some exchanges, even though FTX has started Chapter 11 bankruptcy proceedings, and Bankman-Fried is under legal and regulatory scrutiny in the United States and around the world. FTT is now valued at less than $2, but surprisingly, there is still a market for it. I think there is an expectation that once one shifts away from the embers from this conflagration, there will be some value left in this exchange. There will be some assets that will still be left over that will have marginal value, and the token can be used in order to derive value from those assets. But, he added, he expects FTT's value will fall even more in the coming days as we learn more about how the company that had value more than $30 billion imploded so spectacularly. Zitlin Jones says that there may be investors who are holding out hope that someone buys FTX out of bankruptcy, and then their tokens will be worth something again. But he suggests there will be another reason why there is still a market for FTT. People buy up Zimbabwe and trillion-dollar bills because it's an anecdotal, and they might like these as collectibles, he said. Perhaps FTT is a new collectible that we'll marvel at 100 years from now. I highly doubt that. So this is an article I wanted to talk about too, because it kind of touches on why cryptocurrency experts, investors are not dissuaded by the fall of FTX. With celebrity endorsements from A-listers like Matt Damon and Tom Brady, the FTX exchange and cryptocurrency in general appear to have security through star power. But now, with the recent collapse of FTX, the crypto star appears to be fading. If there had been any regulation at all, like there is for other exchanges or other parts of the financial system, this wouldn't have happened, said financial expert. In a nutshell, FTX experienced the equivalent of a bank run. Customers fled the company, pulling billions of dollars out all at once over concerns about its balance sheets. There's a lot more to it, but ultimately it raises an important question. Is cryptocurrency here to stay or a flash in the pan? I think that's a huge hit on the trust, said Carl Sachs, a cryptocurrency expert and founder of Fintrust, a crypto lending protocol. He doesn't think the fall of FTX is the fall of crypto by any means. In 3 months, clean slate. New companies will come out and take the place of the old ones that may be focused on decentralization. Cryptocurrency investors aren't altogether dissuaded either. It has been a wild journey, to say the least, said local crypto investor. He's sticking with crypto for long haul. However, he admits newcomers should be aware of the risks and potential pitfalls. You've got to do your own research. A lot of people go into this with the plan of treating it like it's a casino, which is not how it's meant to be, he said. There's some other stories, but I'm not going to get into those other stories. But I think it's interesting to talk about FTX and the implosion and the scrutiny whenever some company takes everybody by storm, and then it seems too good to be true, and it generally is. Some people make billions on it, as happened in this case. Some people made a lot of money, and then there are those that hold the bag. I was watching someone talk about crypto, and their advice was, and again, I'm not giving any financial advice or legal advice or anything like that, but their advice was that maybe you shouldn't leave your crypto in an exchange. You can self-store crypto, and you should probably look into that if you have a lot of value. I know our John McAfee was a big advocate of self-storage of crypto and keeping them for yourself, because these exchanges are, as we've seen over and over again, have been raided by hackers who take over and then take all the value. And when they take the value, it's not the exchange's value. If they take the value from you, you're the loser. You're the one that loses. So that's something you should consider. I'm not saying like putting money under your bed. But, if the banks aren't paying you anything, why not put it in your bed? A little inconvenient, but not with crypto, right? I can still use it. So anyway, that's where we are, and I thought it was I've been avoiding this story, whether it was a crypto story or not, but I decided today, yeah, it's a crypto story, and there are those who are going to use it to push for more regulation, but the push is already here for regulation. So I think that debate's over. Now we're just debating who's going to, which entity, maybe both the commodities and the SEC are going to find a way to regulate this industry, and we just hope that they don't regulate it so much as to scare it off shore, and so there'll be no control over it. So we need these industries here in America, and we shouldn't regulate them to death. My own opinion. It's my show. I can say what I want. So thanks so much for joining us. I appreciate you taking the time. I'm going to ask you to like and subscribe, share, and subscribe. We need your help, so I ask you to do that. Remember, if you are facing IRS problems, if you owe the IRS money, if you haven't filed your tax returns, you should give us a call, 312-664-6649. If you have any questions, then the first thing you should do then is get a copy of my book, Deal with Your IRS Problem Today. Go to freeirsbook.com, freeirsbook.com. I'll pay for the book and the printing. You pay for the cover, for the delivery and shipping, okay? That makes sense. So go to freeirsbook.com, get your free copy of Deal with Your IRS Problem Today. Thanks so much for joining me here today on Crypto Tuesday. We shall be back. Let me put this back up because I like that. And we'll see you back here tomorrow. Out. God bless.